Hey, what's up, everyone? Swinging Bull here. Welcome to my earnings stream. I do every Tuesday, Wednesday, and Thursday. Of course, this week the markets are closed on Thursday for Juneteenth, so I won't be doing a stream this Thursday, but today and tomorrow I'll be doing streams. Let me share my screen here on Discord so everyone can see what's going on. There we go. Hopefully everyone can see that. And the company's reporting earnings today. LZB. Of course, everyone knows the Lazy Boy chairs. They're trading at $38.78 a share. People still love their Lazy Boy chairs, of course. And the other one reporting earnings is a healthcare company. It's a biopharmaceutical company, healthcare and supplies. And their name is their ticker is XAIR. It's called Beyond Air. So XAIR is their ticker. This is a penny stock, so probably get a lot of volatility with this one. It's already kind of a little volatile right now. Let me just zoom in here. We'll zoom into the 1 minute chart. And let me go 1 minute chart on both of them. So getting some pre-earnings volatility here with Beyond Air. Lazy Boy kind of ran in the close a little bit. Let's just kind of zoom out here. Let me go 15-minute chart on this real quick. Okay, yeah, Lazy Boy was kind of trading on. They're known to trade on low volume. Their average volume over the 30 days is 389,000. They had over 600,000 volume today, so about 200,000, 225,000 more than what their average trading volume is. But we'll see what the reaction is going to be to the earnings data. Lazy Boy closed the regular session at $38.78, and now it's just sitting here in after hours waiting on the earnings data. Let's just take a quick peek at the data. Matter of fact, I think I got too many windows open here. I'll also go over a spread trade that I opened up earlier today. If I got some time at the end, I'll go over this trade. This is just to allow me to make some profit if there's any downside on SPY below 598. This trade here allows me to profit on that. So kind of like a downside hedge, if you will, instead of just sitting on the sidelines doing nothing. But let me go over here and let's go to XAIR. And they're supposed to report at 4:05 p.m. Eastern. So just another few minutes. They're already getting some price movement, but it might just be some pre-earnings jitters. So they report at 4:05 p.m. Eastern. The forecast for the EPS. Hey, what's up, Duco? Duco over here on Discord. So their forecast EPS is negative 0.14. Forecast revenue 1.39 billion. And let me go back here. I just want to look at a few things. But also, so that's when Beyond Air reports. Lazy Boy is supposed to report at 4:15 p.m. Eastern. So I've got about 12 more minutes for that. Their forecast EPS is 0.93. Their forecast revenue is 558.55 million. Lazy Boy was trading just below their anchored VWAP. Their anchored VWAP's a little over $40 a share. And they closed the regular session today at $38 and some change. And Beyond Air, they were trading below their anchored VWAP as well. Anchored VWAP's around 25 cents a share. They closed the regular session at 28.286 per share. They're sitting here green in after hours, up almost 14% in after hours. So maybe their data's out. Let me take a look at my other monitor here and see if we got some info. And let me type this in real quick. Looks like the penny stock's running first here. So this is going to be XAIR is the ticker symbol. When I first was looking at the earnings calendar, I thought this was, before I even looked at the chart or anything, I just looked at the name. I thought it was like in the airline sector, and come to realize they're a biopharmaceutical company in healthcare. So I was way off on that one. But let me just look at a few things. There was some momentum building ahead of the earnings for Beyond Air. They do have a FDA filing for lung fit phase 2. So they're past phase 1, now they're in phase 2. That's a mobile nitric oxide therapy on deck. So insiders have been accumulating the stock. They do have orphan drug designation, somewhat of a bullish setup going into earnings. Floats around 65 million shares, I believe. Let me just double check that. Actually, I'll go here to check that. That's easier. XAIR. Okay, floats 74 million. That's fine. They actually they have a positive PE ratio. That's kind of uncommon for penny stocks and biopharmaceutical companies. That's the forecast PE 0.03. And just look at the financials. They actually pulled a profit too. That's also kind of unusual for. Oh wait, this is STNA. Let me go to the red chart here. XAIR. There we go. XAIR. Yeah, positive PE was the forecast, and yeah, they haven't been pulling a profit, but that's very common with these types of stocks. They got some drugs in the pipeline, and once they get FDA approval, then that's when they make their money, right? Debt to asset ratio only 46%, so that's pretty good. Let's just see their cash flow real quick. Actually, I'll just go to the balance sheet statement. Cash and equivalents, about 10 million. That was as of the end of the year last year. So December 31st, they had almost 11 million in cash and equivalents. And the short-term investments is what that number is made up of. So let's go back here, back to the charts. I do want to put Lazy Boy over here on the right. They were also, like I said, they kind of ran into close a little bit, and now they're kind of pulling back, kind of below where they closed at. Let me go 3-minute chart. Yeah, okay, so they closed right here. So yeah, they're just sitting here right where they closed the regular session at. Let's go back to XAIR. This is the penny stock. Did wick up to 37 cents a share after closing the regular session at 28. So they're up a little over 6% right now. Okay, some people are calling XAIR a biotech sleeper. All right, and it does look like the results are out. Let's just kind of go over some of this. So for XAIR, again, healthcare supply company, more of a biopharmaceutical company. Their revenues increased 220% to 3.7 million, compared with 1.2 million for the fiscal year that ended on March 31st, 2024. So nice year-over-year growth there for the revenue. And let's see, for a little bit of the forecast, they are expected to report at least 1.7 million for the quarter ending on June 30th. And of course, that would be Q2, right? And introducing revenue guidance of 12 to 16 million for the full fiscal year of 2026, right, for next year. So let me post some of this data for everybody for XAIR. Sure, didn't really have a lot to choose from this week as far as like big name companies, so just kind of went with what I thought maybe had a little bit of a following. Let me scroll down a little bit more on my other screen here, and let me see if I can fit all this on the bottom of my screen on YouTube. Give me one sec here. Will it fit? Cut off some of the guidance. That's okay. Let me see if I can break this up into two messages here real quick. And then, yeah, we should have time to go over that hedge trade that I alerted to the Discord members earlier today. And that'll be a fun one to go over. Just kind of give people an idea of the types of trades that I like doing. Okay, let me cut off this last part here. And that looks good. All right, let me post this in the comments because this will be a lot better. Okay, there we go. So it should be on the bottom of my screen. Let me actually fix a couple things. Okay, nope, we're good. There we go. All right, I had to fix my screen there for a second. Got about 144 people tuning in, a mixture of Twitter, YouTube, Twitch. Welcome everyone. Just looking at this penny stock, seeing if they can catch a bid or not. They're up about 5% in after hours. Again, this is XAIR and their healthcare equipment and supplies, more focused on biopharmaceuticals and commercial stage medical device. That's what they specialize in. So, but yeah, good year-over-year numbers for them. Again, revenue up 220% compared to the same time last year. So pretty impressive. Let's see if they can hold up here in after hours and stay green. They were up 50% on the day, 58% to be more exact. They opened before the opening bell rang. Well, let's just say the previous close was only like 18 cents per share. They finished the day at 28 cents a share. They were up 58% today during the regular session. So maybe there was some investors front running the positive data, maybe. But they're sitting here up about 4%. They're trading about 29.5 cents a share right now. So nice and green. Let's see if it can stay up there. I'm gonna this is a 5-minute chart here. Let me actually go to trading view. I'm gonna go to trading view. I just want to see some of the trading view. I got it on the right here. Let me put it over here. XAIR. There we go. We got the 1-minute chart, and then I'll put Lazy Boy over here. Lazy Boy should report in about 4 more minutes. So their ticker symbol is LZB. All right. Just wanted to see where some of the retracement levels are on this. Probably put it at the low of this candle here. Actually, I'll go the other way with it. Start from the top, go down here. Yeah, that's good. That's good. So they have retraced 78% of this initial green candle here. That was the candle that printed at 4 o'clock Eastern. So they did retrace 78% of that. So S1 probably going to be. I know these are 1-minute candles, so take it with a grain of salt, but support 1, 29 cents a share. S2, it's going to be like around 27 cents a share. So S1, 29, S2, 27. I feel pretty comfortable with those levels. Again, kind of a volatile penny stock here. So just going to have to keep your eyes on it if you're trying to trade this in extended hours. Not financial advice, but just some easy levels to keep in mind for the remainder of extended, after hours price action. So still waiting on Lazy Boy. As soon as the data comes in, I'll let everyone know, but they're supposed to report in about 2 minutes. Okay, so got about 2 more minutes on there. And let me see if I can pull up some other stuff. And then after we get Lazy Boy data, then I'll show everyone that hedge trade I put in place today. Maybe it'd still be good to enter tomorrow. But I did alert the Discord members about the trade before the regular session ended. So they should have all had time to trade that with me. Let me see. Just want to make sure I didn't miss anything else before we jump over to Lazy Boy. Okay. And for XAIR, eyes are on data for NTM and neurological pipeline plays. Okay. Still a micro cap stock, so of course lots of upside if it does catch a bid. Let me look at some other things. All right, I'm going to go to their investors relations page here real quick, just make sure there's anything else that I can let everyone know. So, okay, so they're they do have a FDA approved nitric oxide delivery system, and also it's been installed in over 45 U.S. hospitals, and they do have plans of expanding internationally through distribution partnerships. Okay, and the company submitted a PMA supplement for 2nd generation lung fit. So they got. I kind of like this company. I mean, I know it's a penny stock, super high risk, but they got products that they're selling. They got this nitric oxide delivery system that they're installing in hospital. So it's not like one of these biopharmaceutical companies that, they're just going from drug to drug, and each drug gets rejected by FDA, and they're just on a course of just trying to get one approved. And the difference with this company is they actually have products that have already been FDA approved, so it kind of generates them a little bit of income while they're waiting for their this. It's a second generation lung fit product. Okay. And so I like the fact that they're working on other things, and some of the things they've worked on, it's already been FDA approved. So, again, penny stocks, super high risk, but I've seen a lot worse, right? So let me just look at some other things here. They just reported a cash position, 6.9 million, with 12.2 million in long-term debt as of March 31st. Okay, so they do have a little bit of cash. The question is, do they have runway to make it to the end of the year, right? So it's just going to depend on how much cash they may be burning every quarter. But they do have a little bit of cash. Maybe that can get them to the end of the year without them doing an offering or something like that. Because, there's always a risk with these penny stocks of offerings and reverse splits and stuff. So that's why you got to be careful with these. All right. I normally only day trade stocks like these. I don't technically, I don't really have anything like this, like in my longer term account. I mean, I guess allocation wise, maybe you could put a little bit of capital on the side for trades like these. But it's got to be money you don't mind losing. Maybe just a very, very small, tiny percentage of your portfolio you can use for these speculative stocks, right? Lazy Boy's getting the move. Lazy Boy trying to catch a bid here. Let's see if it's the real move, though. It's 4:17 p.m., so their data should be out. I'm going to jump to Lazy Boy just here in just a second. For XAIR, I did want to point out they did reduce their operating expenses. So that's always a positive thing. And their net loss did improve. Yes, they did report a net loss, but it was a pretty good improvement from 2024. So, there's some positive things there. Okay. Now they did have they did say there's a significant cash burn. So that's why you need to be careful with this, because they're only sitting on like $7 million. That's not, and if they're in fiscal year 2025, they've already burnt 44 million. So that's why you got to be careful with these, because this just smells offering all the way through, right? I mean, I got to imagine they might do an offering as soon as they burn through that 7 million. They're going to try and raise some more capital. All right, let's go to Lazy Boy. Make sure I didn't miss anything. Oh, okay, Duco. Yeah, no problem. I'll see you in the next stream, brother. So let me go over to my other screen and see if we got Lazy Boy data. And then I should have enough time to go over that hedge trade that I told all the members about today that I was going to do. And basically, they're put debit spreads. Okay, we do have Lazy Boy's data. They missed EPS, but they did beat revenue. The EPS is actually down 3.16% year over year. They reported adjusted EPS of 92 cents. Same time last year, it was 95 cents. Okay, we got some selling going on Beyond Air. Again, it's a penny stock. That's what that's how these things behave. Got a little bit of selling on Lazy Boy, but it's kind of still just trading right below where it closed the regular session at. Nothing too crazy, but they did miss EPS, so I don't think investors are liking that very much. 3% decrease from the same time last year. Revenue, they beat revenue just by a little bit. Well, the revenue came in at 571 million, and I think the forecast on that was, let's see here, yeah, forecast was 558 million. So they just beat revenue just by a little bit, but nonetheless, still a beat. But they did miss EPS. Revenue Same time last year, 553 million last year. So they beat revenue a little over 3%. Oh, I'm sorry. They beat the year over year number by 3.16%. But they beat the forecast for this earnings by 2.4%. So we'll go ahead and let me post this for everybody on YouTube because of course Lazy Boy is the more stabler stock, if you will. It's obviously not a penny stock, trading up here in the high 38. So just real quick on Lazy Boy, they did have hold on, let me go here. Lazy Boy, yeah, nice and positive PE ratio of 13. EPS nice and positive, 2.9. They actually pay a dividend too, so that's pretty cool. 2.2% dividend according to Webull. So this could be an ideal stock to maybe run the wheel strategy on or something. But yeah, financials don't look bad. They don't look bad at all. Kind of good. Income statement kind of ranges between like 27 million to 40 million. They had a really good Q4 last year, brought in 40 million. Now that's positive net income, so that's good. Year over year numbers, overall good. A couple red little blips there, but that's okay. Yeah, so profitable company. It's always good to see. Balance sheet, debt to asset ratio 47%. That's pretty good. See how much cash they're working with. This is the quarterly view, but cash and equivalents 317 million. They got a nice cash position. So this is a healthy company. It's a healthy company, and they pay a dividend. What's the weekly chart look like? Yeah, I mean, weekly looks solid. I mean, they're coming off of a pretty solid uptrend after bottoming out around $20. That was back in 2022 when they bottomed out at $20, but they've basically been in a solid uptrending channel since like the end of 2022. So they've been on a solid run. You could probably just slap a trend channel on this thing, and you could be trading this for the past few years. I just like the Webull's trend channel. It's easy to draw out. So it's in an ascending trend. It kind of popped out of it a few months ago, and then it popped back into it, and now it's back out of it. So we just kind of see if maybe they can recover and get back up into that channel. But outside of the recent price action, I mean, this would have been an easy range, ascending range trade. You kind of pick it up at the bottom of the range and then sell at the top and just rinse and repeat. You could have rinsed and repeated this thing quite a few times over the past few years. So I like to look at stuff like that. Technical analysis wise, I'm more of a fundamental trader. I like checking the income statements and the balance sheets and things of that nature. And I like trading good companies, I guess is a good way to put it. So, but yeah, Lazy Boy, there's some upside here. I mean, zoom out a little bit more. Let me go monthly chart on this thing. Yeah, they've been in the 50s before. And obviously they've been at 52-week highs. They've been keep hitting 52-week highs. But I like the company. We just reviewed the balance sheet and the income statement a little bit, and it looks good. They got good management. Let me take a sip of water. Okay. What I want to do is I want to post some of this Lazy Boy data on the bottom of my screen. So it seems like a solid stock that someone probably might have in their longer term portfolio. And again, this would be consumer discretionary, I think, right? I mean, I don't know if you would put it in consumer staple because they sell furniture and everyone always needs furniture, but I would look at them more as a consumer discretionary type stock. So if there's a percentage of your portfolio that you like to allocate to consumer discretionary, maybe you could take some nibbles on this one, and they pay a dividend, so that would be good, right? All right, let me. I just want to put the EPS and revenue data on the bottom of my screen on YouTube. And I think that'll be sufficient for now. There we go. So let me see if I can fit all this here. Copy. Okay, so it looks like we got just enough time to go over that hedge trade I opened up today. I'll explain it and everything. I use SPY put debit spreads to do it. So if you're not familiar with spreads, you know, you might not understand. But hey, if you want to learn about spreads, come see me in the Discord. I'll teach you all about them. All right, let me post this data for Lazy Boy. Okay, so they missed EPS, but they beat revenue. Okay, so a little bit of mix there. They're still just trading right where they closed at. Now they did just wick up to almost $40 a share. Then they came back down. Again, just kind of sitting flat here. XAIR, they 100% retraced their little run they had before the earnings came out, their little end of day move. Again, they were up almost 60% today, and just probably some profit taking going on. It's still trading at 24 cents a share. The previous close was around 18 cents a share. So even if you didn't take profit at the top here, you got in yesterday, you'd still be profitable. So not all bad there. All right, we got just enough time to go over this hedge trade. We got our reactions on both companies. XAIR kind of rallied into close, and then when the earnings data came out, it's kind of downtrending now. Lazy Boy is kind of sloppy price action. You can see all these wicks that it's printing, and it's just kind of ping-ponging up and down. But at the end of the day, it's trading at right where it closed at. So Lazy Boy kind of flat. But we went over some of their fundamentals and financials, and they do pay a dividend, and I think it's a pretty stable company to own. Not financial advice, just my opinion. All right, let's go over this hedge trade real quick. Okay, so I actually got filled at $39 when I bought these earlier today. And I alerted it to my Discord group. I'm currently long on 4 stocks right now, and so today I wanted to put some downside protection in place where, you know, if the overall markets sold off, I didn't just want to sit on the sidelines and watch. And you know, I wanted to be able to make some money if there is some selling on the indexes, right? Like S&P and NASDAQ, Dow, or whatever. I usually use the S&P for my downside hedge trades. So in this particular situation, I use SPY, which is the ETF that follows the S&P index, right? You could do something similar on SPX if you want, but I just prefer SPY when I do these. Okay, so what I did was the technical term for this is a put debit spread. Okay, the more kind of slang is a bear put spread. I guess if you remember it as a bear put spread, then you'll know it's a bearish play, right? Because there's also a put credit spread, and even though you're using puts, to the untrained eye, you'd think that's a bearish play, but a put credit spread, you're technically short the puts, which means it's bullish, right? So you got to know what these things mean if you want to get involved in spread trading. And once you've dipped your toe in the water a little bit and done some practice, you'll get the hang of it. It'll be just fine. But so this was SPY put debit spreads is what I opened today, and you can see here if SPY has if there's any more downside on SPY, I'm gonna make money on this trade, right? And this is just one lot size, okay? So one contract spread. And what we did was we bought to open. This is gonna be all on one trade ticket, by the way. Buy to open the 598 strike put, okay, on SPY, and then we sold to open the 597 strike put on SPY. And I did choose July 11th as my expiration date. That'll give me some downside protection for about 3 weeks, which means if there's any downside on SPY, I'll be able to make money on it. Now, let's talk about what the max gain is on this, because I've said before in all my streams, when I put these downside hedge trades in place, I do like to target at least a triple-digit return on my money. And that's assuming we need to utilize the hedge, right? Sometimes I put hedges in place and I don't need them, right? And that's okay. You know, we might lose a little bit of money on the hedge, but that means the long positions that we're hedging should be performing quite well. And the little bit of red you see on your hedge, if you don't need to utilize it, it's just a drop in the bucket compared to the amount of money we were expected to make on our long positions. So I always say, like, an easy way to explain it would be, if I'm long on some positions and my profit targets on those long positions basically mean that maybe I'm expected to make $500 in profit on my long positions. I'm just pulling numbers out of the air to make it easier to understand. If I'm expected to make $500 profit on my long positions, I don't mind spending 100 or 150 bucks to buy some insurance, right? That's the best way I can explain it as to what exactly I'm doing here. So I'm just spending a little bit of money where if the trade does, if the markets do sell off, instead of sitting on the sidelines crying the blues, we're actually going to be making money, right? And it's a good thing. So I always try and stay hedged. I always like having protection in place at all times, especially with all the uncertainty we've had over the past 3 months or so. I mean, shoot, from February to April, we experienced a 20% market correction. And guess what I was doing during that whole time? I was rinse and repeating put debit spreads and just kind of milking it, right? So we made some good money on the downside when that market correction was going down. And I did keep my expiration dates a little bit shorter during that downtrend. That way I could rinse and repeat these SPY put debit spreads like every week or every 2 weeks. I was trading the weeklies and just doing like 7 to 14 DTEs on my hedges at that time. Now that, there still is some tariff uncertainty lingering, but I think the bulk of it's probably behind us. So now my expiration dates on the hedges, I've kind of pushed out to more like 3 weeks, right? Sometimes 4 weeks. So when the volatility is high and the uncertainty is high, I like keeping the expiration dates on my hedge trades shorter. That way I can really rinse and repeat it a lot more times compared to just having a monthly cycle, if that makes sense. And then when the uncertainty and volatility goes down, then I'll put a little extra time on it. That's just how I trade them. But so in this example, this is the trade I entered today. I usually do like 4 or 5 of these. That way, if there's a market downturn, I can make several $100 on this that I wouldn't have if I didn't have this in place. So let's just go over the return on investment or return on risk, if you will. So I'll just go off of what this is doing, because Option Strat is saying that these cost $40 each. It's a $1 wide spread. So the total value of the spread is $100, and that's for one lot size. If you're only paying $40 for it, what's the max gain? Well, it's going to be the if it's worth $100 and I pay 40, that means my max gain is 60. And you get your $40 back. Someone had questioned that the other day. They thought that, okay, if I buy this debit spread for $40, for some reason they thought they would only get, because it says max profit 60, they thought that they would only be getting $60 back if the trade worked out. That's not how it works. You get the $60 profit and you get your $40 initial investment back. So that's how they work, right? So if you can make $60 on a $40 investment, that's 150% return on your money, right? On your capital that you used, or on your risk, however you want to look at it. It's 150% return. So this meets my criteria of, I like triple digit returns on my hedges, because if I need to use this hedge, I want to make sure the risk reward is really, really good. Because like I say, there are times where I put hedges in place and I end up not needing them. And yes, that does cost me money, but it's kind of the cost of doing business, to be able to have some downside protection so you can sleep at night a little better, right? So this one pays 150%. So it definitely meets my criteria on if I, if there is downside on SPY, I know I can get 150% return on my investment. And to figure out the break even on the trade, you simply take the strike that you that you bought. It's the strike that's closer to the money. So the 598 strike, and this is on a debit spread. So you take the 598, and then minus out what you paid for it, which would be the $40, right? So we minus out 0.40. That means my break even is 500 is SPY at 597.60, which means if SPY is below 597.60, this is going to be a profitable trade. Okay, that's what that means. All right, and when we're trading spreads, we're not concerned about theta decay. Okay, we just want the underlying stock on the right side of our spread, and that's if you're opening the spreads out of the money. You know, and then they eventually go in the money, and you know, that's a good thing. That's how we profit on these. Now theta, more specifically on credit spreads, theta is actually a good thing. You might have heard the term in the past of theta traders, right? And those are your premium. Those are your premium traders, right? They do sell to open. All their trades are sell to open, and then when they want to close it, they buy to close. When you're collecting credit on a spread, if it's a credit spread, theta is a good thing because the underlying stock could just trade sideways. It doesn't even really have to move. And what you're and if you were out of the money with that credit spread, of course you want the spread to stay out of the money on the credit spread side. The stock literally could just trade sideways, and what you're collecting is the theta value. So as a credits seller, theta is actually our best friend because on the credit spreads, we're collecting premium credit on the onset of the trade. So instead of, you know, everyone's so used to just buying naked options, you know, day trading options. All right, I buy a call, I need the underlying to go up, and that's how you make money on the call. You buy a put, you need the underlying to go down. That's how we make money on the put. That's if you're trading naked options. But on when we're writing contracts and collecting credit, we collect credit on the onset of the trade, and then we kind of want those contracts to go worthless, because once they go worthless, then we pocket all the premium that we collected on the onset of the trade. That's how we make money when we're trading credit spreads. Okay. So this particular one is a SPY put debit spread. I just wanted some downside, a little bit of downside protection, where if SPY literally just sells off below 598, which was where it was trading at today, I know that I can make some money on the downside instead of just sitting there doing nothing and watching the you know, we'll get drawdown on our long position. So this is a way I can combat the drawdown. And you know, obviously if we need to use it, we make money on these trades. And then once the drawdown goes away and the market stabilizes and all the drawdown on your long positions have gone away, now all the money we made on our hedge, that's just bonus money, right? Because now the market's recovered and gone back up. We made, instead of sitting on the sidelines during selling, now we're making money when there's a market downturn. And then when the market recovers and goes back up, that's just going to be great money for us while we're waiting for the shares to appreciate back up, if that makes sense. Let me see here. Got someone on one of our social platform. Says, hey, great streamer. You stream very well. That's why I followed you. I see you streaming a lot, but you're not affiliated or associated yet. Okay, so maybe giving me a job. I don't know. But no, I appreciate your kind words. You're definitely flattering me, and I appreciate that. I love doing this, you know. I'm kind of, I'll be 43 years old in August. I've been trading for about 10 years now. The past 7 years, more options, more active on the option side. And I'd say the past 5 years is when I became a contract writer. So most of my trades are sell to open now, except if I'm doing a debit spread, then of course that's more of a debit. You're paying a debit on the onset of the trade. But most of my trades, I collect credit. I just like being on that side of the transaction. I mean, we've all heard the statistic, you know, what was it now? Like 80% of options expire worthless. Well, I want to be on the right side of that transaction, don't you? So that's why I like writing contracts, and which in turn gives us a really, really nice and high success rate. So I just love it. You know, I started writing contracts about 5 years ago, and I haven't looked back. You know, I run a ton of the wheel strategy, but writing contracts has been my bread and butter for a while now, and it's a lot less stressful, a lot less emotional. You know, because I got other things. I live over here in Florida, and I got other businesses that I own, and Trading this way, I don't have to be glued to the screen every single day, every hour of the day. Of course, I like peeking in and checking and see what's going on and stuff. But usually I just trade a few days a week, usually towards the end of the week, and I get my trades ready for the following week. And it's good if you're busy like I am, and it's low stress, low emotion involved. A lot of my trades can be mechanical. You could even put a bot in place if you have the right parameters and just kind of auto trade it yourself without you doing anything, right? A little more advanced there, but I can show everyone that if anyone's interested. But yeah, it's about 4:40 p.m. I'm gonna go ahead and end the stream. We got our reactions. Lazy Boy again. It's the price action's kind of spotty, kind of sloppy. Nonetheless, it's literally sitting where it closed at to the penny. So not much excitement from Lazy Boy, but that's not a bad thing. It's not a bad thing. It could be a good thing. I mean, being flat is better than the negative reaction, if you're a Lazy Boy investor. So, it's fine. And they pay a dividend, so it's fine. Beyond Air, which is the biopharmaceutical company, and then they're also doing some things with related to like lung research and stuff like that. They rallied into close. Maybe it was being front run or something, but once the data came out, they have been trending down since then. But they are coming off of a 58% green day. They had a solid day today leading up to the earnings. And I mean, the previous close was only, I think it was 18 cents a share. So yeah, they did 100% retrace the little, the rally they had at the end of the day today. But nonetheless, they're still up quite a bit. I mean, they're sitting at, compared to what the price was yesterday. So they're sitting at 24 cents a share now, a little above that. And they closed yesterday's session right around 18 cents. So they're still up 6 cents a share. And if you divide that by what they were trading at yesterday, so they're still up 33% from yesterday. So it's still good. It's still fine. But again, it's a penny stock. More volatile than the others, and that's just what you get with the penny stocks. And just again, just a reminder, they did report around 7 million in cash, but they've already burned through, I think, 45 million in cash this year, and this year's only half over. They've only burnt through 44 million. So I just wanted to point out that kind of smells like they're going to need to raise some capital soon. So I wouldn't be surprised if maybe this does rally a little bit to kind of get the share price up there a little bit, and then they're gonna probably hit it with the offering. So just you gotta be aware of that if you're trading this. Me personally, I'm more of a conservative trader, so something like this I would only day trade. I don't hold overnight stuff like this because I'm just over the years I've learned to be more of a conservative trader. I like being safer. I mean, shoot, I just went over a hedge trade with everyone, so that's kind of give you an idea of the type of trader I am, if that makes sense. But yeah, my name's the Swinging Bull. My real name's Benjamin. Everyone calls me Ben, all my friends and stuff. On the Discord, I go by the Swinging Bull. I'm with PB Alerts. And if you're looking for a new home, check the links in the description. And if you do end up, you can even join our Discord for free too. So join the free section, see how you like it. Tag me in the chat. I'll come by and say hello. Maybe we can talk for a little bit and see what your situation is. And maybe there's some tips or tricks I might be able to give you to make things a little better for you. Again, not financial advice. This is all just my opinion. But yeah, if you're looking for a new home, come check us out. And other than that, I hope everyone enjoyed the stream. I'll be back tomorrow at 4 p.m. for another one. And again, the market's closed on Thursday, so I won't be doing the stream that day. But I hope everyone enjoyed. And until then, I hope everyone has a great night. And I'll see everyone in the very next stream. Cheers, and I'll see you later.